Okay, welcome to The Explainer. I am so thrilled you're here because today we are doing something a little bit special. We're tossing out those dense, heavy textbooks and replacing them with an ultimate, fully structured exam masterclass on SA 700, forming an opinion and reporting on financial statements. Now, if you're prepping for your ICAI exams, you already know this standard on auditing is literally the bedrock of your syllabus. So by the time we wrap up here, you're going to have absolute conceptual clarity, and more importantly, the exact exam terminology completely locked into your brain. Let's take a quick look at our roadmap. We're going to hit objectives and scope, dissect the anatomy of the report, clarify those tricky roles and responsibilities, dive into a practical exam toolkit, and then we'll wrap it all up with a mnemonic finale to make memorizing a breeze. Let's do this. All right, Section 1, Objectives and Scope. Every standard has a core purpose, right? And for SA 700, it really just boils down to what the auditor is ultimately trying to achieve in the first place. And that brings us to the holy grail of the entire audit process, the true and fair view. You are going to see this phrase literally everywhere in your exam. But what does it actually mean in practice? Well, it means the financial statements are completely free from material misstatement. It means they faithfully, honestly represent the company's transactions. They've got to be complete, neutral, and strictly comply with applicable accounting standards and legal requirements. So listen, when you're writing out your exam answers, please don't just say the financials look okay or fine. No way. You've got to tell the examiner explicitly that you are looking for that true and fair view. Now, if you actually find that true and fair view, well, you've reached the ultimate goal, which is expressing an unmodified opinion. An auditor gets to express an unmodified opinion only when two major, absolutely crucial conditions are met. First, you have to have obtained sufficient appropriate audit evidence. And second, you've concluded that the financial statements are prepared in accordance with the applicable financial reporting framework with zero material misstatements. Basically, it's the clean bill of health that every single company wants to see. Okay, moving right along to Section 2, Anatomy of the Report. So we know our objective now, but how do we actually express it to the world? We do it through a highly structured, formally written auditor's report. Let's break down exactly how this thing is built. Now, here is the question that haunts pretty much everyone's exam prep. What exactly goes into the 12 essential elements of the auditor's report? Trying to just rote memorize a long, dry list of 12 random items is a massive headache, right? But honestly, it doesn't have to be. We just need to logically group them together. Because when you look at it, this structure is actually incredibly logical. We can just break those 12 elements down into 3 simple buckets. Bucket 1, the headers. Here you've got your title, something like Independent Auditor's Report, which obviously proves your independence, and your addressee, which is usually the shareholders. Bucket 2 is the body. This is the real meat of the report. It holds your opinion, the basis for your opinion, your assessments on going concern, key audit matters, or CAMs, and the clearly defined responsibilities of both management and the auditor. And finally, bucket 3, the sign-offs. That's just your signature, the place you signed it, and the date. So just like that, 12 random elements suddenly become 3 highly organized, easy-to-remember sections. Now, I want to zoom in on the body of that report for a second. The very first section of the body is the opinion section. It literally starts with the phrase, "In our opinion, the accompanying financial statements give a true and fair view." It is absolutely crucial to remember for your exam that the opinion section comes first in the body. You never bury the lead, right? You want to tell the shareholders right out of the gate exactly what you found. So skipping down to the end of the report, there is one critical rule you need to know about the date element. The date on the auditor's report absolutely cannot be earlier than the date on which you, as the auditor, have obtained sufficient appropriate audit evidence. I mean, think about it rationally. You can't just sign off and date a report saying everything is perfect before you've actually finished collecting the evidence to prove it, right? This is a classic trap in ICAI multiple choice questions. So do yourself a favor and lock that rule into your memory right now. All right, on to Section 3, the Great Divide. We are shifting gears now to a notorious area for exam confusion, because inside that report we just talked about, we have to distinctly and clearly separate who is responsible for what. I want you to literally visualize this exact split during your exam so you don't mix them up. Over on the left side, management. They are responsible for doing the actual day-to-day work of running the company. They're the ones preparing the financial statements, they design and maintain internal accounting controls, and they're the ones who initially assess the going concern of the business. Now, on the right side, you have the auditor. The auditor's job is not to run the company. Let me repeat that. The auditor is responsible for obtaining reasonable assurance that management actually did their job correctly. So we test those internal controls, we evaluate the accounting policies that management selected, and ultimately we form and express our opinion. Think of it like this. Management creates and the auditor evaluates. Simple as that. Great. Let's keep the momentum going with Section 4, the exam toolkit. This is where we shift into high-yield, practical exam application. I'm going to give you the contrasts, the specific scenarios, and the little hacks you need to score those top marks. First step in your new toolkit is fully understanding the boundary of SA 700. Comparing SA 700 to SA 705 is a hugely popular theory question on the exam. So, SA 700 strictly deals with the unmodified opinion. It's the happy path, right? Everything shows a true and fair view, no problems. But the literal second you hit a material misstatement or say a limitation on your scope where you just can't get the evidence you need, boom. You are kicked straight out of SA 700 and you fall into SA 705 territory. Because SA 705 is what handles modified opinions, things like qualified, adverse, and disclaimer opinions. Let's actually trace the exact decision tree an auditor follows in the real world. Step 1. The audit procedures are fully completed. Step 2. You ask yourself, have I obtained sufficient appropriate audit evidence? Step 3. You evaluate the financials and ask, okay, is there a material misstatement present here? Now, if the answer is no, meaning there are absolutely no misstatements, you proceed straight to Step 4 and issue an unmodified opinion under SA 700. But if the answer is yes, there actually are material misstatements, well, then you have to pivot and modify your opinion under SA 705. All right, let's test this out with a quick rapid-fire scenario. Imagine you're sitting right there in the exam hall and you read this prompt. The financial statements comply with the Companies Act, they follow accounting standards perfectly, and you found absolutely no material errors. Think about it for a quick second. What is the exact opinion you are issuing here? If you guessed an unmodified opinion, yes, spot on. Excellent job. You successfully applied those core conditions of SA 700. You got all your evidence, everything complies perfectly, there are zero material errors. So, you issue a clean report. Okay, but let's try scenario 2. This time, you're auditing a large manufacturing firm, and during your work, you discover that their inventory records contain material errors, and these errors directly and significantly affect the financial statements. What's the opinion going to be now? In this case, the situation may require modification under SA 705. And why is that? Well, because it completely fails the SA 700 test we just learned. The very presence of a material error means you simply cannot state that the financials give a true and fair view. You are forced to exit SA 700 and look over to SA 705 to issue either a qualified or an adverse opinion, which basically just depends on how pervasive that error really is. To wrap up our toolkit, we absolutely have to focus on the essential ICAI exam keywords. Guys, you must anchor these exact phrases in your memory. I'm talking about unmodified opinion, true and fair view, reasonable assurance, sufficient appropriate audit evidence, basis for opinion, and key audit matters. Please do not use synonyms. Do not try to paraphrase them in your own words. The ICAI grading rubrics are specifically looking for these exact professional terms. Using them is how you prove to the examiner that you truly, deeply understand the language of auditing. And finally, Section 5, the mnemonic finale. We made it! Here is the ultimate memory trick that is going to quickly unlock that massive 12-part sequence question when it pops up on your exam. So the mnemonic we're using is TOPBAG Mars SD. Let's take a look at the first half. TOPBAG. T naturally stands for title. O is for opinion. P is for the person addressed, so your addressee. B stands for basis for opinion. A is your assessment of going concern. And G is for gay audit matters. Okay, yes, obviously it's actually key audit matters, but honestly spelling it with a G for gay makes the word bag actually work. And let's be real, a little bit of absurdity is exactly what makes these memory tricks stick in your head under pressure. Now let's finish it out strong with the second half, Mars SD. M stands for management's responsibilities. A is for auditor's responsibilities. R represents the report on other legal or regulatory requirements. The first S is for signature. The second S is for site, meaning the place of signature. And finally, D is for date. Top bag, Mars SD. I highly recommend you just write it down on scratch paper a few times. Once you do, you're going to have that entire 12-part sequence perfectly memorized and ready to deploy on test day. So as we wrap up this explainer, I want to leave you with one final question. Have you obtained the sufficient appropriate audit evidence you need today to conquer SA 700 in your exam? By mastering the concept of a true and fair view, understanding that strict, clear divide between management and auditor responsibilities, and locking in that TOP, BEG-MARS, SD structure, I'd say you absolutely have. Keep reviewing these concepts, keep practicing those scenarios, and you are going to be incredibly well prepared. Thank you so much for joining me for this explainer, and happy studying.